welcome back to the Money Show. Now, there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have Anil Rego, the founder and CEO at Right Horizons, joining us on the show. Also, once again, viewers, before we start addressing your queries, do not forget to send us your portfolio queries on our WhatsApp number 865-797-4571, or you can email us your queries on themoneyshow@etnow.tv. But on that note, then, let's welcome the guest on board, and we have Mr. Anil joining us today. Mr. Anil, thanks so much for joining us and wishing you a very happy new year. The first query is coming in from Mr. Jitendra Rawal from Bangalore. He wants to invest 20,000 rupees per month from the start of this new year till the next 10 years. Could you please suggest some funds where he can get the best returns?
Yes, so I think one of the best ways to look at it is to look at an SIP. Okay, so and it's good that you're looking at it already and wanting to do a monthly investment starting from 2025. And you're also looking at a 10-year perspective, which is good. Long term is always very important because you may see volatility in the short term. In fact, that volatility can also help achieve much more because when markets are volatile, then you're buying at a lower price, right? And if your perspective is longer term, that is helpful and it'll help you to do better. So the SIPs that we think you can do is, maybe break it up into 4 or 5 funds. Do a combination of, let's say, a large cap like an ICICI blue chip. You can do a mid cap opportunities of HDFC. Similarly, you can do Nippon India multi-cap fund. And on the small cap side, you're looking at funds which are maybe smaller size and some of the stress test, the SEBI did and asked to do, etc. And that's why we are suggesting Mahindra Manulife small cap fund. So combination of these SIPs is what would make sense for you.
Okay, Mr. Anil, thanks for that. The second viewer query coming in from Mr. Vivekanand Biradar. He's asking you to review and share feedback on his mutual fund portfolio for 10 years. The portfolio has already been shared with you. It's also flashing on the screen. Some of the funds he has is UTI Nifty 50 Index Fund, Kotak Emerging Equity, PGIM India Flexi Cap Fund, and a few more as well. How is the fund selection and the amount distributed? And also, does he need to make any changes in his existing portfolio?
Yeah. So first of all, I think you have also done a bit of a diversification across various funds. You looked at an index fund. You look at flexi cap and mid and small caps as well. So I think there is a bit of a diversification out there. I think something like a PGIM flexi cap fund, considering a lower Sharpe ratio, and the negative alpha is something that we think that you can exit. Okay, we're also wanting to be a little conservative on the markets in the short term, and so from that standpoint, even momentum, Tata Nifty mid cap 150, momentum 50 is something that we believe that you can avoid. And so our view is at a time like this, it's good to also strengthen a little bit of your large cap and maybe a flexi cap, and that's what one would suggest right now. So ICICI Pru Blue Chip Fund is something that you can do for the large cap, and say a HDFC Flexi Cap is something that may be suitable for the current environment as well.
Okay, the next query coming in from our viewer Adarsh, who's from Pune and is 43 years old. He's investing 85,000 rupees per month in equal weightage in 5 schemes. The 5 schemes are flashing on air. Some of them are Motilal Oswal Large and Mid Cap, Edelweiss Mid Cap, as well as Tata Small Cap Fund, and a couple others. His investment horizon is 14 years and he's going to receive 1.5 crore rupees through the sale of a property, which then he also wants to redeploy back into these 5 mutual funds. Also, could you suggest him a good fund that he can create an SWP of about 75,000 and the money to be plowed back into the SIPs? What's your suggestion here?
Yeah. So first of all, I think, in terms of your current portfolio, I think you've done a good job. You've diversified it. You also have it across various categories. So I think one can keep it. Of course, you can look at the ELSS fund. Once it completes 3 years, you can review it and see, whether you would like to take it out or not, because you don't need the tax benefit there. after, we invested once and, it's gone past the minimum period. On the other hand, coming back to your question of investing this proceeds from a property of 1.5 crores. Okay, first of all, I'm not sure, you should be doing what you're suggesting. Okay, which is basically saying that I do a SWP and again I invest that again, right? So you're just honestly probably complicating it. Okay, and when I'm doing an SWP, then I may need to look at a fund which is conservative. Okay, so instead of that, my suggestion is to invest in an STP mode. Okay, a systematic transfer plan, where you invest the money into a liquid fund or a liquid plus type of fund, and then do a systematic transfer into an equity fund. So for example, I would suggest, the distribution then can be into these equity funds, but first park it into a debt fund and then transfer it over a period of anywhere between 6 months to 9 months. And you can even do it on a weekly basis. Okay. So that is something that will ensure that, even if there's volatility within the month, okay, so it's able to capture those volatility points. So I would suggest breaking this up into a combination of, let's say, Motilal Oswal large and mid cap fund of 25 lakhs, Edelweiss mid cap, say 25 lakhs, Tata small cap fund 25 lakhs, Parak Parak flexi cap 25 lakhs, and I've also kept something for, if there's more volatility. So I would suggest that, and this you can do as a lump sum as well. ICICI Pru Balanced Advantage Fund is something that you can do for 50 lakh rupees. Now, if you want to go aggressive, then you can reassign this a little bit and keep it. But having all of it in pure equity, and tomorrow, if there's liquidity requirements that you need, or if markets are more volatile, then Balanced Advantage Fund can take care of it. Of course, since we are doing a systematic transfer plan, it will take care of any volatility that happens over the next, if you have it for a period of 9 months, the systematic transfer for the period of 9 months. So this is my suggestion to you, in terms of managing a 1.5 crore requirement.
But on that note, viewers, we'll wrap it up on this edition of The Money Show. Thank you so much for watching.